Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, stocks on Wall Street were down again overnight as we approach likely another 75 basis point rate hike by the Federal Reserve. The Dow off by more than 0.5%, the Nasdaq by almost 1.5%. The economic data that's been coming out is not encouraging in terms of inflation. What's the story in the global equity markets?
Yes, the U.S. market fell sharply at the last hour of trading, erasing the gains at the earlier trading day. If you look at the S&P 500, Nasdaq all went down more than 1% and 1.4%. Basically, the slew of the economic releases were not really backing up possibility of slowing down of the monetary policy. Continuously, there will be aggressive monetary policy where 75 basis point hike in the September 21st is most likely, and even people are considering that there might be 1% rate hike. There's a possibility of that. And also uncertainty is that in November 2nd, another 75 basis point rate hike might be possible, or maybe they're saying that it might be slowing down, but nevertheless, it will continue to be above 0.5% rate hike. If that continues, interest rate environment of the U.S. will be rising to well above 4%, maybe reaching to 4.5% by the early next year. If that's the case, uncertainty continues to remain quite significantly for the equity market and also economic activities. Higher interest rate means obviously much less economic activities and slowing down our economy. Maybe that would cause the possibility of economic recession, and therefore the earnings for the corporation might be coming down because of the higher interest rate environment, and that is the uncertainties. However, we think that the high level of debt ratio of the government, we don't think that interest rate environment for government will be going up to above 4%. If it does, it will be for the very short period of time and most likely to come down again as the inflationary pressure comes down. We think that the inflationary pressure is expected to come down as the oil prices have come down quite significantly and commodity prices come down significantly. Of course, other areas like rental yield still quite high, and therefore it's causing the inflation to be quite high. But that is probably one-off item, and we think that as the year passes by, gradually the inflation pressure will be coming down. If that's the case, we think the valuation of the U.S. equity market as well as most of the other markets are looking quite positive, and therefore we're probably looking into possibility of a transition of the overall equity market directions once the slowing down of the interest rate hike by Fed happens in the future.
Well, that makes sense. And here in Korea, stocks doing more or less what Wall Street's doing. The KOSPI down about 0.8%. The KOSDAQ almost 1.5%. Shares of Samsung hit a new 52-week low, but looks like they closed higher in the end. Petrochemical companies among the hardest hit today. Tell us about the domestic market.
Yes, if you look at the overall foreign investors' investment, it really didn't do much. They did sell somewhat. They sold about 141 billion won of KOSPI and 100 billion won worth of KOSDAQ, but they net bought about 48 billion won of futures market. Clearly, in terms of the market direction, I think the foreign investors are not really looking into a possibility of further decline, but rather they might be looking for a very timid or quite boring equity market trend where it might be range trading in the future. If you look at KOSPI, it was down by 0.8%, and KOSDAQ is down by 1.45%. Actual decline was much bigger during the mid trading days, but has recovered somewhat. But in any case, still went down. If you look at the sector-wise, the sectors such as the auto industry did quite well, and also transportation-related sectors did quite well as well. With the higher interest rate environment, a lot of the companies with export percentage being high will be showing quite good earnings results. We think that earnings are looking quite positive for Korean companies, given the fact that the percentage of the earnings coming from the overseas export is quite significant for most of the companies, including Samsung Electronics. If you look at the currency-wise, it has appreciated a bit, but nevertheless still remains to be quite high. We think that the trend of the foreign investors and the currency are most important factor for the longer-term range of the KOSPI in the future.
Well, speaking of the exchange rate, the Korean currency yesterday got as close as could be to crossing 1,400 won to the dollar. Reports say there was an intervention by the BOK to keep it from going higher. And today, again, staying below that 1,400 mark, we can see this weakness in the Chinese currency as well. What do you see happening with the dollar and the exchange rate?
Right. I think that if you're just looking at dollar itself, you really need Fed to decide to slow down the level of the interest rate hike. Without that, we think that dollar is not going to depreciate. Right now, has continued to be quite high at around close to 109, 110 level of dollar index. If the interest rate hike is that significant, such as 75 basis point plus every time they meet, that is a much higher interest rate environment than most of the other economies, including Europe as well as even Korea. So if that's the case, then we think that the currency depreciation is not going to happen for U.S. dollars. If that's the case, Korean won is not going to appreciate either. In terms of the overall fundamental side of it, there is uncertainty because of the high export the high import prices, given the fact that the energy prices have risen quite significantly this year to date. Of course, the oil prices and the gas prices are affecting quite negatively in terms of the trade surpluses, and it actually definitely is at deficit level right now. We need to see that number coming down further. We think that is expected, while the export continues to be quite strong. If that's the case, then we think that the Korean won, in terms of the fundamental side, is not going to be weakening other than the U.S. pressure of the interest rate environment. For the time being, we're not sure the directions to be any significantly changed in the future, but we think that the level at 1390 is too much in terms of the on the basis of fundamentals. Korea's economic growth rate at 3%, and Korea's overall the fundamentals is quite strong relative to other emerging market economy, and therefore we don't think that Korean won will be depreciating further as the BOK intervenes, and also the fundamental shows continues quite reasonable growth rate. So we think that currency should stabilize in the future. A lot of people are comparing financial crisis period of 1997 and 2008, but we don't see Korean economy being that weak on a relative basis. So we think that this has been a bit of an overshooting of the currency. So gradually, Korean won should be able to appreciate in the future.
Right, in 2009, when it hit the peak, it only lasted a few months. So see if it works out that way this time. Mr. Yu, we'll have to leave it there for today, though. Thank you, as always, for making time for us, and have a great weekend.
Thank you. You too.